Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories. Midcaps outperform large pairs for the second straight day in a range-bound session. Metals stand out in terms of gains. IT utilities are a big drag.
ICICI Lombard slips on missing growth estimates and taking a cautious stance on motor insurance, leading analysts to trim targets. But the company tells CNBC-TV18 it will gain from the new IRDAI expense norms and will outperform industry growth by 200 basis points.
Glenmark Pharma perks up after it settles an antitrust drug matter for $48 million. Piramal Pharma gains on a successful completion of a US FDA inspection of its US Sellers Will unit.
Bajaj Electrical surges after shares worth over 200 crore rupees change hands in a block deal today.
Weak Q4 margins weighs down Tata Coffee. Capacity expansion at its Karnataka unit lifts Som distilleries.
Okay, another day of outperformance as far as the mid-cap index is concerned. 24 points higher on that one. Of course, it's not higher by a big margin, but in a weak market like this, we are seeing some green on the screen. And from the highs, of course, mid-cap index has seen some cuts as we speak. So 31,258 on the mid-cap index. The Nifty is virtually at the day's low. It's a cut of 37 points, and largely these are the banking names which are leading to the losses that we are seeing on Nifty. So Nifty Bank is down 150 points as we speak, and the likes of IndusInd Bank, be it ICICI Bank, all of them are putting a lot of pressure on the Bank Nifty and ultimately on Nifty as well. So, of course, it's the second day running or the third day running, right, when we are seeing some cuts on Nifty. Tomorrow is the weekly options expiry as well. So, important cues to watch. And right now, Nifty has actually fallen suddenly to the day's low as well. So, interesting times.
Yes, up until now, we were holding on to about a 50-point range, right, through the trading session. On the way up, it was 17,666. On the way down, it was 17,611. And with the sudden fall that we've seen in the markets in the last 30 minutes, we are touching that intraday low once again. Need to understand if there was any kind of news which has propelled the markets to slip in the last 30 minutes, not that we're aware of right now, but it's banks, it's many of the IT names which have taken another leg down. Pull up that intraday chart of a TCS or a Wipro or an Infosys. You would see a sharp sell-off which coincides with the weakness that we are seeing at the benchmark level as well. There you have it. IT too is under pressure now. But all in all, it's been a weakish and a quietish sort of a listless trading session, awaiting big cues, whether it's from the global front. Europe as well is not doing too much. The key benchmark European indices are just down about 0.1, 0.2%, so fairly directionless when it comes to global cues, and no big earnings as well that are moving the markets in either direction. But we'll watch the fall in the markets. In the meanwhile, let's talk mid-cap, small caps. This is our segment, Mid-Cap Movers. Vivek is here with that list.
Well, thank you so much for that. Some interesting trends as far as, the broader end of the markets are concerned. If you could broadly categorize, the home improvement theme, names like, tile makers, some of the panel companies, even small paint companies are moving, in today's trading session with quite a bit of volume action. So Green Panel, Prism Johnson, Asian Granito, as well as Rushil Decor, all of these stocks are moving higher on strong volumes. Some of the other stocks that we're tracking, stocks that are moving higher, with volumes at almost 5 to 7 times the typical average. Bikaji Foods, after a while, is seeing almost a 9% uptick. Bajaj Electrical, surging after the block deal. Mirza International, perched at the upper circuit today, and, consumer durable name IFB Industries, after a while, up almost 8%. On the other hand, some of the stocks that are seeing a bit of profit booking, mainly result-oriented names. So Schaeffler India, Angel One, these stocks after weak results down. And mid-cap IT today, after yesterday's surge, once again, they're losing in the session. So Coforge and Cyient both are seeing some selling pressure in the session.
Okay, all right. So mid-cap IT continues to be in focus, but interestingly, the home decor theme that Vivek was talking about, big moves there, right? Green Panel Industries, for instance, is up 17% or 16% in trade as we speak. But now the mid-cap index has also turned red. So yes, there's some selling pressure that we are seeing across the board. It's a good time to get a technical check on the markets. Let's welcome Sameet Chavan for just that. Sameet, good afternoon. Thank you so much for joining us. Well, so far, markets have been range bound. It's a 40-point cut that we are seeing on Nifty. Mid-cap index very volatile. What are the trends suggesting? Which way will things go?
Good afternoon, Sonal. Overall, if you see, the trend has been strongly bullish. Toward the fag end of the March, we consolidated, we formed a strong base around 17,000, and then market, literally took off. A one-way rally of nearly 9 trading sessions pushed Nifty towards 17,800, 900. And in last 3 days, we are clearly seeing some sort of profit booking at higher level. So this is a part of profit booking or retracement in technical terms. But overall, the undertone remains bullish. In last 3 days also, we have witnessed mid-cap index outperforming a lot of thematic movers. If you identify good thematic movers, they are providing good trading opportunities. So overall, for key indices, it's a part of a consolidation phase or time-wise consolidation. But overall, the bias remains bullish, and depth from current level in indices also is likely to get bought into. So in our sense, 17,600, 17,550 is a demand zone for Nifty, and for Bank Nifty, it is around 42,000, 41,800.
What about individual stocks? And when would you change this bullish undertone? The breach of what level will make you a bit cautious and bearish in the markets, and you would look to take a short position?
See, as of now, any decline towards 17,500, 400 would be considered as a part of retracement. But once Nifty slides below 17,400 on a closing basis and Bank Nifty below 41,000, that would be an indication that the trend has again reversed lower, and then probably one can take a bet on the short side. But as of now, another 200 points correction on Nifty and 5 to 600 point correction on Bank Nifty, that would still be a part of its longer degree higher trend. But overall, as far as individual stocks are concerned, we would stick to our bullish stance, and we have buy from the metal space. Metal space has been bucking the trend, and JSW Steel is the one stock that is likely to move higher along with its peer counter. So overall, this stock has already broken out from its important level of 720, and the volume activity has already risen. So we expect this stock heading towards 745. As a trader, one can keep a stop around 722 and go along at current level. Apart from this, slowly, steadily, the pharma space is finding its mojo back. Yesterday, we saw good, traction in the entire pharma space. Lupin is the one stock, that is certainly look quite promising at current level. Yesterday's stock witnessed a sharp surge, which is followed by some consolidation today. But we would consider this as a good buying opportunity. So Lupin is the one stock that we are liking at current level. Keeps a stop loss around 674, and we expect this stock heading towards 725 over the next few trading sessions.
All right. Okay, Samit, thank you so much for joining us. So pharma stocks, of course, in focus. We've been seeing a big surge from the lows as well. We'll do one thing. For now, we'll take a short break. And when we come back, we'll get your mid-cap spotlight segment and a lot more stocks which are buzzing around. Stay tuned. Welcome back. Still tuned into Midcap Radar on CNBC-TV18. Steady at those levels of 7,621, and interesting moves that we are seeing in the broader markets as well. The Midcap index continues to be quite volatile. But in last couple of minutes, we've seen some of them make some moves. Green Panel, for instance, has surged even higher. Himadri Chemicals is the one which is also higher by 2.5%. So some buying in the chemical space continues as well. But it's time for our special segment, Midcap Spotlight. We have Surabhi Sataria, who's joining us to focus on United Breweries. This is on the back of Heineken's Q1 numbers. What does the commentary say, Surabhi?
Thanks for that. So United Breweries is in focus today, and that is because Heineken has reported their Q1 numbers. Now, in their commentary, Heineken has said that in India, they have managed to grow their revenue organically by high single digits. Their revenue growth was driven by both volume growth as well as pricing. Their beer volume grew by mid-single digits, led by Kingfisher, and also their premium portfolio grew in high teens, led by Kingfisher Ultra and Heineken Silver. Now, this is mildly positive for United Breweries as well. Now, they have been struggling with their EBITDA margins for quite a while now. In Q3, their EBITDA margins contracted by nearly 800 basis points. So now this will come in as positive and probably aid their volume growth as well as EBITDA margins. In Q4, their volume growth is expected to be higher by 10% on a year-on-year basis, and this is mainly due to early onset of summers. And with this extended heat wave, this volume growth may trickle down in Q1 of FY24 as well. For now, with Heineken's positive commentary, it is mildly positive for United Breweries.
Thank you very much for that, Surabhi. Let's talk about Glenmark Pharma and Piramal Pharma. Both of them are buzzing in trade. In fact, Piramal Pharma has seen a big up move on very large volumes. Ekta is here to fill us in on the news flow. Ekta.
Thanks for that. Well, I'll start with Glenmark because that stock is in focus on the back of a bit of news. So Zetia is basically a drug which is used for the treatment of cholesterol. And what has taken place is that in a pending antitrust and consumer protection litigation in the US on Zetia generic, Glenmark was named as a defendant. So what has taken place is that the company has agreed to enter a settlement with a group, with a party which was litigating against Glenmark on Zetia generic. As per the settlement, the company is going to pay $48 billion to direct purchasers, which is basically the group which is a part of this litigation, based on the agreement entered. The trial, remember, for this case was scheduled to begin on April 19th in the US courts. Now, just to give you a bit of a background as well, there have been multiple lawsuits in the US in connection with generic Zetia all the way since 2010. Lawsuits allege that the company had entered into an anti-competitive agreement. So there was a pending lawsuit with regards to Zetia generic, which is now settled, and the company is going to be paying $48 million in terms of the settlement. It does come as a positive because there's an overhang which is out of the way, and this is a generally a normal course of business for most pharma companies. Remember, the amount which we've spoken of is not that large in terms of a sum, so hence maybe the street has brushed it off. Glenmark is anyway close to a 52-week high. Piramal Pharma is in focus because the US FDA has concluded the inspection of the company's Sellersville manufacturing facility. They've issued an establishment inspection report, which means that the inspection has concluded successfully. Now, this is important because this has been one of the USPs for Piramal Pharma, that they have an excellent track record when it comes to the US FDA. They, in fact, have closed all 4 US FDA inspections since November 2022 successfully, which includes the Digwal facility, Riverview, Lexington, and now Sellersville. So this is definitely a positive for Piramal Pharma. Remember, the stock is also corrected very significantly from that listing price of around 200 rupees odd last year, and maybe there is some amount of value buying that the street is recognizing with regards to their track record.
Big move on Piramal Pharma. Thank you, Ekta, for joining us with all those details. Moving on, BML Land Assets that has slipped in trade post its debut today. Its listing clears the path for partial divestment of the government stake in BEML. Vivek is here to tell us more on what it means for BML Land Assets and BML as well.
Well, absolutely right. So, two separate companies now. BML Land Assets is the one that's listed today on the exchanges. It's been a bit of a subdued listing. It listed at around 290 rupees a share, which in itself was, marginally below what the street was anticipating would be the actual fair value that the market would be ascribing to the land bank of BEML. A little bit of context in terms of what exactly does this company own. The company basically is a holding company, as the name suggests, for all of the land assets that is held by BEML. And shares were allotted in the ratio of 1:1 to the BEML shareholders. So, for each share that you held in BEML, you now have one share that you own in BEML land assets value. Now, why is this important for BEML? Now, this is one condition that has now gone ahead and cleared the way as far as the partial divestment of the government stake in BEML is concerned. Remember, the government is looking to divest almost 26% stake in the company via the divestment process, and analysts now believe that post the listing of BEML land assets, there could be invitation of EOIs as well as movement as far as the entire divestment process of BEML itself is concerned.
Thank you very much for that, Vivek. Let's move on and talk about Jindal Stainless. Now, the board has approved a special interim dividend for FY23. It's a 1 rupee per share, but it's the first time the company has given a dividend in the last 15 years. This special dividend was given upon the conclusion of their merger process. Earlier today, we had a chat with Anurag Mantri, the group CFO of Jindal Stainless. According to him, that deal which they have signed with an Indonesian company is significant and it will help in backward integration. He also goes on to talk about their capex plans, the overall debt on the books. Listen in.
This is the start of our dividend journey after last dividend was declared long back in the splitted entity in the 2008. And now onwards, I think this is based on the current special interim dividend based on the 9 months number. And as we complete our financial year, the board will again evaluate the further dividend. This is a very unique JV where we are getting into the 49% stake in a nickel rotary kiln furnace, where we'll be getting the nickel NPI as well as some of the nickel outputs, which can be also used into the electric vehicles side, EV battery chain. We will also not have a risk of any of the operational risk of managing the entire mining and any other operation. It's only a 49% stake where we'll get a commercial beneficial interest. The payback for this project is very fast. It's just 2 years within the start of the operation. Overall, I think within 4 years, we should have a full payback from the construction till the payback.
Okay, that is Jindal Stainless. The stock is flat right now, but that's the first time they've spoken after they've merged the two entities. So important to understand their commentary as well from the business perspective. For the markets, we have seen a further decline on the Nifty. It's down 62 points as we speak. And the Midcap Index too has extended the losses that I was talking about earlier. So the advanced decline ratio is favoring the declines right now. So that's the kind of move that we've seen across the board. And if we just talk about the Nifty pack, we have a couple of these stocks which are at the day's low, which include the likes of Titan. We have UPL as well. So these two stocks should also be on your radar. There was a negative report from Antique on UPL yesterday where they spoke about higher inventory levels which could impact the company's performance this time around, and the raw material headwinds and generally the global headwinds that the company has been facing as well. So all these stocks on your radar, and with that we'll slip into a short break and get you more stocks which are buzzing around in broader markets. Stay tuned.
Welcome back. There is that sudden sell-off that we are seeing in the markets, as Sonal has been pointing out. The Nifty is now trading below 17,600, and it's breached the low that we were, of 17,611. That was the intraday low on the Nifty till 1 p.m. and now that has been taken out. The Nifty is now down 67 points, Sensex lower by about 240 points, and it's an across-the-board sell-off. So you've got an IndusInd Bank, IT names is selling off even more, and Infi was down 1.5%. Now it's down nearly 2%. HCL Tech has seen aggressive selling ahead of its numbers tomorrow. Anyway, these stocks have fallen so much since the beginning of the earnings season, since TCS came out with the numbers. But I guess the street is still very nervous of what HCL Tech is going to report and guide, and even in terms of the commentary, because there is no let-up in the selling pressure. But let's get you one more important update, and this one's for the real estate sector. There is an advisor which says that PE inflows in Indian real estate have come down very, very sharply in the first quarter of 2023. Take us through that note.
It's a big slide that the note is suggesting, Reema. It's a 95%.
And this note is by?
Savills India, which is a real estate consultant, which has indicated in its note that PE deals in the first quarter of calendar year 2023, they are down by 95%. So just this time last year, they had pumped in around $45 billion in Indian real estate market, and now it has come down to $1 billion. So that definitely is a sharp decline that we have seen as far as their flows are concerned. Now, a couple of reasons which they talk about which led to this fall. It is due to fears about global recession. We are talking about rising capital costs, and third is mismatch in valuation expectations both on the seller and the buyer side. Now, there have been recent concerns of the banking crisis, global recession, and also the SVB crisis. Globally, they have been talking about how it had impacted commercial realty, but the impact on Indian market also has been that big. And this has added to the unpredictability or uncertainty of leasing demand in the country as well. Now, reduction in global capital available for residential lending and development of office assets is something which has added to the woes when it comes to financing from PE firms as well. However, in this $1 billion that has been pumped into the Indian real estate market, 64% of total investments have come in for commercial office assets, and they have remained as the leading performer here, indicating that yes, office demand is still okay here, but maybe the retail side or the warehousing side and the residential side is not doing so well. Investments this time around, they have come in only from international institutional investors. They have given some instance that focus has been on developing office in Pune, industrial and storage facilities in Mumbai. So these are some of the spaces or pockets which have done well. But overall, it's a big slide, Reema, and that is something which should be worrying and talks about the overall picture as to how things globally are impacting markets in India as well.
But quite understandable, right? Given the macro uncertainty and what we've seen over the last 2 months.
But that is surprising also because on one hand, we've been talking about the strong domestic demand in the residential real estate. Yeah. If we speak to commercial real estate companies as well, they are talking about higher leasing, but still it is not able to attract enough capital because cost of capital, one, has become so high. And you've been talking about IT demand not doing so well. So that indirectly, of course, is impacting here.
Okay, that's a sobering report coming in on the PE investment in real estate. The market's at the day's low. The advanced decline ratio has also now turned even keel. Just pull up that advanced decline ratio, and it would reflect the sell-off that we are seeing. The Midcap index, which is holding up in the green up until now, has also dipped into the red. Some of the big losers outside of the index, we've been running you through the index losers. ICICI Lombard is under pressure in the banking names. Punjab and Sindh Bank has lost close to about 4%. RBL Bank has slipped below its 50-day moving average, sharp cut of 2.5%. AU Small Finance Bank is down. Canara Bank is down 1.5%. So some of these mid-cap banks too are weakening in trade. Outside of that, keep your eye on Coal India. Large cap company, but Coal India has seen a big fall in trade. Z Entertainment is down close to about 2.5%. Sudden slide seen. Ambuja Cement is trading at 380, and that too has seen a bit of a knock. Out of time then on Midcap Radar. Your stocks when we return.